Welcome to Bears in Exile. Today is Wednesday, November the 28th, and this is the market overview, looking at the Dow SPX 16AU, UPFXE, GLD, SLV, and everything else that we look at almost every single night. Very nice day for the market overall, up 100 and almost 7 points. Very impressive. And that was after the really nice down move at the beginning of the day, able to recover in a pretty massive fashion. Matter of fact, just taking a quick peek here at the 5-minute, we can see that the nasty decline, which was pretty darn scary right off the bat, but recovered and poof, off to the races. Just incredible. Anyways. So what do we have to look at today? Well, I was saying since last week, Monday was the day to be watching for, and Monday came. I said that maybe the turn would occur over the next 2 days, Tuesday, Wednesday. It ended up being that was the decline, and after the turn this morning, I am not very confident in the bears anymore. There are some conflicting signals, but I'm going to go through all of that real fast. So here we are, and my lines are messed up again. How about that? There we go. So we've been watching the descending trend. The descending channel and the lower part of the descending trend line for quite a while now. We've been watching the 200-day moving average. We knew it needed a retest, which it did, and then promptly pulled back from. And now today, it was evident when everything started turning around, especially when we got to the dead even mark today, that there was a change in the winds, and I went short. And once you know it, it just kept on going and closing right at the 200-day moving average today. It's not going to be difficult for it to bust out through it, but this looks really positive. This is a nice formation. We do have a very clear hanging man at the bottom of a possible range. We've already pierced the 200-day, so it's weaker. We still have most things in ascent. We were looking at the fast stochastic rolling over and hoping that it would take some of the other indicators with it. But that is not to be. It started, but it could not seal the deal, could not complete it. And if we zoom way out, we knew the 14-day RSI moving average was in ascent, and it was just a question of could we get a secondary reset, have everything go back down to the bottom, meet it, and then climb together. But we said at the time also that it was a possibility that you could get stuck up here, which does occasionally happen. Sometimes it takes more time, but more often it is a sharp up and down. And I am not convinced that this is going to be a sharp up and down at the moment. We were also saying we were looking for the slow stochastic to turn. That was the key, and it never did. And so we'll notice in the past, when it is not a sharp up and down, normally you have a cross of the slow and the fast. The fast takes over on the top, and then the slow takes over at the top, and then the fast crawls back over. We're now having the slow overtake the fast, and with everything in ascent, it's easy to imagine that the fast is going to loop back up. So I don't know how long that will last. If that's the case, it could be a week. It could be a week and a half. So do I want to fight that? No. So odds were better right here for down. The odds are better right here for more up. So just going with the odds. There's nothing in the heat map suggesting a top at this moment. And actually, there's a little bit of room between the 200-day and the close today. But nonetheless, it was still a really good formation. How about it? We have more room now to move to the upside on RSI, the 14-day RSI moving average, and the MACD, and we could easily get stuck up here. So for the moment, more bullish than bearish. Yep. And going on, oh, I need to adjust this, make everything a little bit bigger. Going on to the 60-minute. Are we overheated? Are we too high already? Well, we knew that, well, what is there? What is there to see here? Well, we have the 14-day RSI moving average heading down. We have the stochastics high, the CCI high, the RSI hanging around near 50. We're looking at a bullish cross of the MACD, and the MACD histogram is in ascent. So there are a couple of little things that would suggest that maybe it's a little bit toppy, but yeah, I'm not going to worry about that, because the moment we break the 200-day, we're going to have a load of short covering if it breaks it in strength, which is entirely possible at this moment, and then everything's going to get dragged up. So I'm not overly concerned about the 60-minute at this time. Going on to SPX. And we had talked about clearing the 200-day moving average, unlike the Dow, which is a much better sign. And today, everything else very similar to the Dow, unable to get to the 200-day moving average before it was bought back up. Very close to the lower descending trend channel of the trend line of the descending channel. How about that? And everything is identical in the secondaries. We have a tiny bit of a blip in the heat map, but nothing to worry about. It's the same as yesterday, so no worries there. So the question becomes, where exactly is this going? How high can it go? Well, where are we at today? We're at halfway point of the graded candle from the 7th, which should be some resistance, but yeah, if there's any follow through, that's going to break. So we have resistance right here, just a hair below 1430. There should be some resistance there. We have the lower price consensus level down here at 1425. We have the descending lower channel trend line of the channel up here at about 14. Well, today it's 14.15. Tomorrow will be like 14.12. But you break this one, I can easily see it going to 14.25 and 14.30. Roundabout. Right in that vicinity. And then it'll be time to evaluate what the charts look like. Assuming we don't get a rollover tomorrow. But I guess we'll see. I guess we'll see. That would really put a damper on things if we're looking for a secondary reset, and then tomorrow the slow decides to roll over, in which case we'd have to reevaluate once again. But just working off of what we know tonight, definitely bullish biased. Going on to the VIX. Alright, so this was really cool. Really cool. This was mentioned in the daily running thread today. We had talked about the uptick that we had on Monday. It did some progress on it on Tuesday, and today it knocked it out. This bubble is fixed. This uptick is complete, and it took 2 days for it to complete. Excellent. We have to see what it wants to do next, but if we get a close, break and a close below the major price consensus level, it should be going down right here to, let's see, 214.68 roundabout major price consensus level for October, and if that is broken, then it would be going down here to 1361. Yeah, it seems difficult at this moment that it could drop so much, especially with a dark area in the heat map. But we have the 14-day RSI moving average in descent, which is the overall trend. And yeah, we do have the fast stochastic moving through it. But what that means is there's only limited time here until it flips over, in which case it'll make that move much easier. So still descending on the MACD, up on the MACD histogram, down on the RSI, up on the CCI, up on the stochastics, down on the 14-day RSI moving average. Just a matter of time before this flips. So good for the bulls. Moving on to TNA, and this is one that I'm playing with in a different way. Instead of going long TNA, I am short TZA. And what do we have here with TNA? Well, it's bullish engulfing all of yesterday. It's engulfing the day before that as well, the real body anyway. It closed above the 200-day moving average. You might say at this point that, well, we see this all the time. It gets above it, it closes above it, then it falls back down through. That's entirely true. But candle by itself, very nice. Beyond that, what do we have to look for? 14-day RSI moving average in ascent, very early in its move. This did look like we could have easily had a secondary reset and a rollover, but slow stochastic still moving up. A slight tick down on the CCI, but moving up on the RSI, moving up on the histogram, moving up on the MACD with the bullish cross completely complete. While you might say that this is massively extended, which actually it is, it's going to do what it wants to do at the moment, and at some point we'll have a good tell that it wants to flip, and hopefully we'll have enough time ahead of time to catch some of that. But at the moment, unfortunately, no. So might as well ride along with it. UUP. Yeah, the dollar. Probably the most important chart. And what do we have to work with today? Well, we had the uptick yesterday, and it went up to right there and did not reach it today. It is bearish engulfing today. A little bit of a blip in the heat map, but 14-day RSI moving average moving on down. Was hoping for that secondary reset, and slow stochastic says no. Moving up on the CCI, down on the RSI, down on the MACD, down on the MACD histogram. Certainly looks like it has more to go, and the all-important line that we've talked about so many times should be tested, and if it's broken, then the bulls should rejoice, and we'll see if that happens. Going on to USO oil, and it did gap down, but it was positive all day long, so it makes sense for the markets to go up, while USO itself was so strong today, even though technically it's down. 14-day RSI moving average still moving up, down on the CCI, down on the stochastics, up on the RSI, down on the histogram, sideways on the MACD. There actually isn't as much as I would hope for there. We have a little bit of a gap to fill to the upside, but not a whole lot telling us. It's actually pretty darn iffy if you ask me. And GLD, massive gap down. It hit the news all over the place that somebody hit the sell button in a really big fashion. We had the downtick yesterday. It was completely gapped today. We have a blip in the heat map for a bottom. Most of the secondaries declining. 14-day RSI moving average ascending. So, yeah, well, there could be some short-term weakness here. It seems like the overall trend should be up, even after today. And SLV, I had talked about this one in the daily running thread a few times, maybe in the video. Hoping for a move to $30. That would be a good shorting area. Instead, it went down with gold and sympathy, and that actually turned out to be a really good thing, because we got a downtick today and it was resolved intraday. So whatever bubbly stuff we had here, it's all fixed. And 14-day RSI moving average in ascent. Almost everything else in descent. The MACD itself still going up. Yeah, questionable in the short term, but longer term should be good to go. I went long on this one today. Um, if I can ride that all the way up to 34 or above, I'll be very happy. Stop out green and then go short. That's my plan. Moving on to Comp Q, the NASDAQ. Another good sign. This one should lead the overall market. And what did it do? Closed above the 200-day moving average. Broke through one of the possible ascending trend lines that should have been resistance. So very good sign. There's another one right above it, coinciding with the lower price consensus level for this month. And for the most part, everything is in ascent. 14-day RSI moving average. The only things holding out are the CCI and the RSI. I'm sorry, the CCI and the fast stochastic. But they are holding high. So not too much to worry about that. If it crosses the trigger line, that might be something. But at the moment, we don't have anything in that regard. Going on to Apple. Yeah. Having problems with the long-term moving average bar, but not bad on the day. We did not get any downtick, not that that would really matter at this moment. And for the most part, everything in ascent, with the exception of the fast stochastic and the CCI, both declining slightly, but both holding high. Slow stochastic, no rollover. So did not get what we were looking for in that regard. And what else is there? JP Morgan, most important bank. No, I'm out of order. GE, trying to get a better read on the Dow. And what do we have here today? We have bullish engulfing the real body of the candle, stopping at the long-term moving average bar. And it's the same as every other chart. There's no need to rehash. There's nothing in the heat map saying that there is a topping area here. It looks nice. Maybe it'll pause a little bit tomorrow, getting through the long-term moving average bar, but if momentum can be sustained, there should be a lot of short covering very, very soon in the overall market. JP Morgan now, JP Morgan. And this one very interesting. Hanging Man, bottom of a possible range. And most things in ascent, not to the same extent as most of the other charts, but pretty much the same, and not a bad formation here. Not bad at all. And XLF, the financials as a whole, and once again, hanging. Oh, it's not really a hanging man, but it has a nice tail at the bottom. Tail isn't long enough, and essentially. It's not quite as good as JP Morgan. Nope, barely a tick up on the 14-day RSI moving average, down on the CCI, down on the fast stochastic, and essentially going sideways on the MACD histogram, and barely up on the MACD itself. This one could look better. And that's going to be about it for tonight. Yeah, we had a nice decline through Wednesday. It did not kick off a decline like it could have, but it was a nice decline all in itself, and now the winds appear to be shifting, so gotta shift with them. As always, all investing decisions are your own. This chart and video for entertainment, educational, and consumption of time purposes only. Thank you very much.